Welcome back to the deep dive. Everyone's been talking about the 2024 election and what it means for investments, so
Yeah,
we decided to take a deep dive into that.
yeah, for sure.
You sent over a bunch of reports and analyses from U.S. Bank, and honestly, some of the findings are pretty surprising.
Definitely. The 2024 election with former President Trump back in the White House has thrown a curveball, that's for sure.
Yeah.
It's a wild ride.
So right after the election, the Dow, the S&P 500, and the NASDAQ even hit record highs, almost as if the market was celebrating Trump's victory. But bonds, well,
Bonds weren't as enthusiastic, they dipped a bit.
they did.
But one of the really interesting things is that certain sectors like small cap stocks, energy, and financials, they surged. It's almost like they knew something was coming.
Right, like they had insider information. It really makes you wonder if investors were anticipating a Trump win all along. But the U.S. Bank reports, they actually caution against attributing everything to the election. They point out that the economy has been surprisingly resilient. 2.8% growth in the third quarter, keeping pace with the second quarter.
That's right. The market is complex. Elections are just one piece of the puzzle. Consumer spending, business investments, even the Fed's interest rate cuts. They all play a role.
They do, but I think it's safe to say that everybody's really curious about what a Trump presidency means for their portfolio.
Absolutely. And he's already making waves with his policy proposals. Big corporate tax cuts are on the table, potentially down to 20%, even 15% for companies that manufacture in the U.S. And he's talking about eliminating taxes on tips for service workers
Yeah.
and even tax deductions on car loans.
Yeah, it's huge.
Yeah.
So the U.S. Bank research, this is where it gets really interesting. They analyzed 75 years of market data going all the way back to 1948 to see what patterns emerge after elections. And guess what? Conventional wisdom.
Oh, yeah.
Totally wrong.
Yeah, the data shows that a single party controlling the White House and Congress doesn't necessarily lead to big market swings. The really interesting scenarios, the ones with statistically significant links to market performance, involve, get this, divided government.
Divided government. That's not what you usually hear.
I know, right? But the data is pretty clear. Two of these divided government scenarios actually saw market returns that were higher than the long-term average.
Okay, so tell me more about these scenarios. Which ones are we talking about?
Well, one scenario involves a Democrat in the White House and full Republican control of Congress. The other has a Democrat in the White House with a split Congress, but Republicans controlling at least one chamber.
So a Democrat in the White House with Republicans holding some power in Congress seems to be a good thing for the market historically. I would have never guessed that.
It seems counterintuitive, but that's what the historical patterns show. There's also a third scenario with a Republican president and Democrats controlling both the House and Senate. This scenario also saw positive returns, but they were slightly below the long-term average.
That's fascinating. So while those election night headlines might make you think the sky is falling, it's not really about who wins or loses. It's a lot more nuanced than that.
You got it. Election outcomes might make headlines. But the things that really drive the market, the things that actually impact your investments, are economic and inflationary trends. Those are the forces to watch.
Okay, so we've got this historical context. We know the economy is doing well, and we've got a new or old president with some pretty bold policy ideas. What should we be focusing on as we move forward?
Well, the really fascinating thing about this situation is that Trump's policies could actually amplify those economic trends we were just talking about.
Okay, so how could his policies actually impact those key economic drivers?
Well, let's take those proposed corporate tax cuts, for example. If they go through, companies could see a big boost to their profits. That could lead to more investment, more hiring, and ultimately even stronger economic growth.
So those tax cuts could fuel the economic engine even more, but
Yeah.
what about the other side of that? You mentioned concerns about the deficit.
Right. If those tax cuts aren't offset by spending cuts or revenue increases somewhere else, they could definitely lead to a larger deficit, and that could spook the bond market.
Interesting. So there's a potential trade-off. Boosting growth in the short term, but maybe creating some risks longer term.
Exactly. It's all about balance.
Right.
And that's where it gets really interesting for investors. Understanding these potential ripple effects can help you make smarter decisions about where to put your money.
So let's say I'm an investor trying to make sense of all this. How can I connect the dots between these policy proposals and my own portfolio?
One way to think about it is which sectors are likely to benefit most from these policies. Take energy, for example.
Yeah.
Trump's been a big supporter of domestic energy production. We could see oil and gas exploration really take off again. which could be great for energy companies.
So if I'm bullish on Trump's energy policies, I might want to think about adding some energy stocks to my portfolio.
It's
Yeah.
definitely something to consider, but of course, you always want to do your research, make sure it aligns with your overall investment strategy and your risk tolerance.
Right.
But yeah, understanding how these policies could play out can give you an edge.
That makes sense. What about other sectors? Any other potential winners under a Trump presidency?
Well, financials could also get a boost from his policies. Deregulation is often a theme for Republican administrations.
Yeah.
And that could mean less red tape for banks and financial institutions.
And we saw those financial stocks jump after the election, so maybe the market is already pricing in some of those expectations.
Yeah, it's possible. But remember, investing is a marathon, not a sprint. It's important to focus on the long game, you know? Don't get caught up in the day-to-day noise.
Right. Long-term perspective is key. We've talked a lot about the potential positives, but are there any risks investors should be aware of?
Absolutely. One big concern is trade tensions, especially with China. We've already seen some talk about tariffs.
And those tariffs could affect all kinds of industries, right? Manufacturing, tech, all of them could feel the pinch.
Exactly. So it's really important to diversify your portfolio. Don't put all your eggs in one basket. That way, if one sector takes a hit, other parts of your portfolio might be doing well enough to make up for it.
Diversification is always good advice, but it feels especially relevant now with all this uncertainty around trade.
Yeah, for sure. And here's another thing. Elections can be unpredictable, right? We saw that in 2000 and 2020. Those close races, legal battles, all that. Uncertainty makes markets nervous.
Those were nail biters, for sure. Sounds like we should buckle up. Could be some volatility ahead.
There could be. But those historical patterns we talked about,
Yeah.
they suggest that markets tend to do well over time, no matter who's president.
That is reassuring. So while we can't predict the future, we can be prepared and have a solid plan.
Exactly. And that's really what it comes down to. Having a plan is the cornerstone of successful investing, especially during times of uncertainty.
So what does having a solid financial plan actually entail?
Well, it starts with understanding your own goals, your risk tolerance, and your time horizon. And then it's about crafting a strategy that aligns with all that.
So it's not just about picking stocks or chasing the next big thing. It's about having that personalized roadmap, right?
Precisely. A good plan will help you navigate the ups and downs of the market and stay focused on your goals.
And that peace of mind is priceless, especially with all this going on.
It really is. And here's something else to consider, You don't have to figure all this out on your own.
That's a good point. It can feel pretty overwhelming keeping up with all the economic indicators and the policy changes and trying to understand what's happening in the market. Where can listeners go for some guidance?
Well, financial advisors can be a huge help. They can help you figure out where you stand financially, what your goals are, and then come up with an investment strategy just for you.
So it's kind of like having a coach for your finances, someone who helps you stay on track and make smart decisions.
Exactly. And there are a ton of resources online, too. Good financial news websites, investment blogs, even some online courses about investing.
Wow, so there's no excuse for not being in the know. There's a wealth of information out there.
There really is. You just have to be careful about where you're getting your information from. Make sure it's coming from people who know what they're talking about. But yeah, the knowledge is out there.
And speaking of knowledge, what are some key takeaways you hope our listeners will walk away with from this deep dive?
Well, I hope they'll remember that even though elections can cause some short-term ups and downs, what really drives the market are those long-term fundamentals. Things like economic growth, interest rates, and inflation.
Right. Those are the things to pay attention to, not the day-to-day political stuff.
Exactly.
Yeah.
And I also hope they'll remember that understanding how policy changes can affect different sectors can give them an advantage when it comes to making investment decisions.
So it's about connecting the dots between politics and their own portfolios.
Exactly. And finally, I really hope they'll take to heart how important it is to have a financial plan. It's not just about picking stocks. It's about having a roadmap for your financial future.
And that roadmap can make all the difference when it comes to dealing with those inevitable ups and downs in the market, especially during those crazy election years.
It really can. And I think that about wraps up our deep dive for today.
It does. This has been a really insightful conversation. Thank you so much for walking us through this complicated topic. You really broke it down in a way that was easy to understand.
My pleasure. Always happy to talk about this stuff. And remember, knowledge is power when it comes to investing.
Yeah.
The more you know, the better equipped you'll be to reach your financial goals.
Couldn't agree more. And to all of our amazing listeners, thank you for joining us on this deep dive. We hope you found it useful and helpful. Until next time, happy investing.